Adjunct Professor Moran, Microeconomics 112. Our last video on taxes, who pays the income tax. Taxes can redistribute income. As we saw in the last video, taxes can be proportionate, same percentage for all, regressive, where the less affluent actually pay a higher percentage of tax, or progressive, where the more affluent pay more in dollars as well as percentage. Okay, this graph is still relatively current, although it's 1997 data. That number is about $43,000 now because of wage inflation. You can see that the top 1% are paying 17% of the income tax, which and the lowest 50% are paying 14% of the income tax. So you can see that the tax code, federal tax code, is set up to be progressive. Now, whether that is a fair number, whether that the top 1% should pay even more than that or not, is open to debate. But the structure of the tax code, federal tax code, federal income tax code, looks progressive. U.S. tax structure, federal tax code is progressive, but state and local tax structures are largely regressive. So on balance, the United States tax system, it's considered to be slightly progressive. Okay, other things you could pay tax on, different types of taxes include, there's a personal income tax both at the federal and state level. Corporations have to pay taxes. Under the Trump administration, I believe it was Trump or Bush, were lowered, and Biden is considering increasing those taxes from 21 to I think 28%. There are sales taxes, which are very regressive. That's your 8.65 sales tax when you go buy something. And there's an excise tax. Excise taxes are like the tax on gas, where it's kind of hidden from you. When you pay a sales tax, you pick up the price. To pick up the thing, there's the price, and then at point of sale, they add the sales tax. An excise tax, when you pull in the price, the tax is already included in the price of the item, so it's somewhat hidden. And again, as we discussed, the sales tax includes about 46 cents of state tax and about 18 cents of federal tax. It's very, very aggressive. So here again is a table summarizing different types of tax. Personal income tax. Individuals have to pay this. Corporate income tax. Some economists conclude that the firm bears this tax, but I don't agree, because it's a cost of business. So they're going to, some of that will be paid by the owners, but some will be paid by consumers, passed on consumers in the form of higher prices, much like the taxes we discussed in the prior unit. It depends on the elasticity of supply and demand. Sales tax paid by consumers, and specific excise taxes paid by producers and suppliers based on elasticity of demand. That'd be the same for this. Part of that tax would be paid for by consumers overall. Okay, and then property taxes. Owners of land and property, very high in Long Island. So those are some instances of taxes. Just remember that a flat tax, a constant, paid by everybody regardless of income, is a flat or proportionate tax. A tax that falls, that the more affluent pay a higher percentage is a progressive tax, and a tax where the less affluent pay a higher percentage is called a regressive tax. And that concludes our discussion of taxes and our microeconomic course.